Hey, what's up, guys? John here. Institutional investors are scheduled to own 40% of the entire U.S. housing market, 40% of all single-family homes in America by 2030. In the next 6 years, think about how crazy that is, how big of a jump that is. It's estimated that they own about 5% now, so they're going to increase their position 8 times. 8x their position from now until 2030. Now, what should you be doing and how is this whole thing going to play out? Well, I'm going to give you the framework in which Blackstone, Starwood, BlackRock, a lot of these large corporations are working with right now to acquire these properties and what you should be doing if you have a goal of owning a property. Maybe you are renting right now, you want to own a duplex or a triplex or a fourplex. Maybe you have one house, you want to own 2 or 3. You want to build up a mode of safety for yourself and your family. I'm going to show you what you should be doing right now, because the next 3 years I believe are going to be more important than any other period in history for people that want to create wealth. Please hit the like button. When you hit the like button, YouTube will share this content to educate more people about what's really going on in the housing market and the economy. And if you want to fix your credit, you want to position yourself for this great wealth transfer, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. Go there, schedule a free strategy session at GreatCreditFast.com. Take a look at this. CNBC reports that institutional investors may control 40% of the U.S. single-family rental market by 2030, right? Jeff Bezos, this is Benghazi right here. So MetLife Investment Management predicts this could surge to 40%. Talking about institutional investors, they currently own 5% of single-family homes, single-family rentals, and it's going to jump and surge 40%, right? So just for context, there are 143,786,655 properties in America, housing units. They would then own 57,514,662 properties, right? That's up from 7.1 million right now, almost 7.2 million. So they're going to go from 7.2 to 57.5. That is a massive jump. How are they going to do it? How are they going to do it? Because we're looking at the housing market right now, really tight supply. People don't want to sell. They have the golden handcuffs. They have that 3-4% mortgage. The only way in which they are going to go from 7.2 to 57 is there's going to be a surge of distress to hit the market. And that's what a lot of institutional investors are getting prepared for right now. Here's what I mean. Starwood Capital. This company owns 115,000 rentals. 115,000, just one company. And this was as of 2022. They picked up a lot of inventory. Since then, I've heard numbers exceeding 150,000 houses. Look at Blackstone. Blackstone raised a $30.4 billion fund. And where are they going to be looking at? Rental housing. Rental housing is one of them. Hospitality, lab office, and data centers. But rental housing, they are the founder of Invitation Homes. Invitation Homes owned about 80,000 properties right after the great financial crisis in 2009, 10, and 11. So they really started acquiring. Look at BlackRock. So this came out about a month ago, a little bit less than a month ago. BlackRock sees huge opportunity in cast-off banking. BlackRock is poised to become a bigger buyer of assets that banks unload to improve their capital liquidity after concluding that the industry faces years of upheaval brought on by high interest rates, stringent new regulations, and possible consolidation. Gary Sheldon, a vice chairman of the world's biggest money manager, is leading efforts to position BlackRock's funds as sources of capital for banks looking to sell assets and securities, large portfolios of consumer, commercial, and residential loans. So you have BlackRock, Blackstone, Starwood, some of the biggest real estate investors in the world. They're sitting on the sidelines right now with mountains of cash, right? Mountains of cash for a reason, just for a reason. Here's what I think that reason is. So a lot of people, 40% of all homes, 40% of all mortgages in America were taken out between 2020 and 2021. Just a 24-month window, 40% of all mortgages, right? Well, people locked in mortgages based on thinking we're going to go back to 2018, 2019, everything's going to be normal again, and they just locked in a great, very low interest rate mortgage. People think, hey, this is a great asset for me. This is free money. But what happens when the cost of the world gets more expensive? Property insurance continues to rise. Property taxes goes up. Utilities go up. Everything continues to increase. It's going to change the debt-to-income ratio on these properties. A lot of people are not going to be able to hold on to these deals. And so when you look at where rates are right now, people generally like to refinance when things, they step into troubling times. Well, right now, if you have a 700 credit score, you're about 8% mortgage, right? 8%. The average credit score in America is a 698. so which is almost 8.2%. If you have perfect credit, you have 7.56. Now, some loan officers, they might be able to do a little bit better, but this is ballpark. This is kind of where rates are right now. And so when you look at these numbers, if you were to sell people to sell their properties, they're not going to be able to sell that $500,000 home. 8% mortgage, 30-year fixed, 6% down, $4,293 as easily as they would be able to sell it, say 2 years ago, 3 years ago. Because when rates are, 4%, that $4,293 mortgage goes to $3,000, right? That's attainable for a lot of people. But look at what is happening now. So people that have these properties that have equity and they want to refinance them, if they have a 780 credit score, they have some options. 760, they have some options. But when you start to step down, and they're quoting, in the sevens, but when you start to step into like the, average credit score range, no results found. 680, no results found. 720, 1, right? So credit's going to become even more important to get financing. And Jerome Powell is likely going to continue to increase interest rates. So how is this whole thing going to play out? Well, what I think is going to happen is I believe that Jerome Powell is going to continue to likely increase interest rates, probably the next meeting or two, another 25 basis points each. He's going to likely continue to keep interest rates elevated for longer. And what's ultimately going to happen is consumers, they're going to basically run out of money. They are already basically tapped out. And so they are running on credit cards right now. Credit card interest rates are at all-time highs. People are walking into financial stress. And so when people walk into financial stress, what are they going to do? Well, they're going to sell off properties. And who is most likely going to sell off these properties? Mom and pop investors. How many rentals are owned by mom and pops? Nearly 46% of the 49.5 million rental units are owned by mom and pops, right? So you think about that, about 25 million, give or take about 23 million rentals are owned by mom and pops. That is a massive figure. So when you look at this goal of, this goal, this is the goal of institutional investors, but when you look at this, 40% of all rentals by 2030, it's going to mainly be a lot of mom and pop investors flipping over their properties. And they're mainly 1 to 4 units, like these entry-level deals. This is what I think is the opportunity for people that are renting right now. Because whether people like it or don't like it, this is likely what's going to happen. So if you're renting right now, the goal should be to get one of these deals. Because what's ultimately going to happen is if you buy, let's say, a one-unit or a one-unit house, a single-family home, and you buy that property and you lose your job, right, you're going to be able to basically lose that property. But if you own a triplex or a fourplex, it's still considered residential. You can still get a 30-year fixed rate loan on it. You can still get that additional income that's coming in. You can have that safety net. And that's what I think is going to be important. People that are renting right now is to build out options. And a fourplex is a great option. And I think that we're going to start seeing a lot of small businesses basically get greatly impacted. They're going to be forced to sell off their assets. So if you are renting right now, if you're renting, that should be the goal. Because when these institutional investors start acquiring all of these properties, they have so much power and authority over one's quality of life. Because they can increase rents, they can decrease rents, they can do whatever they want and either positively or negatively increase the quality of your life or change the quality of your life. That's what I think is going to happen. But if we look at Facebook, we look at a lot of these online platforms that are running ads, the more demand there are for ads, the more they're going to continue to increase the prices on them. So what do I think is going to happen? I think we're going to start to see a great wealth transfer unfold here. I think we're going to see so much property change hands in the next couple of years. It's going to be absolutely unbelievable. The only way that's going to happen is the greatest rug pull of all time, like I've been calling on this channel, that's going to be coming. If you want to invest in real estate, now is the time to get great credit. Now is the time to have that 780, 760, 800 credit score, because you have options. You have options for lending and financing with great credit. Bad credit, you have a 600. Look at this. Let's see how many options you got. You got one from New America Funding, and it's not even an option. It's just an ad. Now is the time for a cash out refinance. Maximize your home equity today. No, there's nothing, right? No results found. No results found. That's the type of market that we're in right now. Everything is going to be credit sensitive. And I think that what is ultimately going to happen is people aren't going to be able to get financing. Most people are not going to be able to get financing because they're going to have too much credit card debt. They're going to not have the income to qualify for these loans, and they're not going to put themselves in a position to take advantage of some of these deals, which are going to, I think, going to be way, way more deals and opportunities than we've seen in the great financial crisis any other time in history. And that's why all the smart investors are sitting on mountains and mountains of money, because they know it as well. What do you think about this entire situation? Drop below, hit the like button, add me on IG. And if you want to fix your credit, you want to position yourself for this wealth transfer, we'd love to help you at my company, GreatCreditFast.com. Schedule a free strategy session, completely free strategy session. See how we can help you at GreatCreditFast.com. Link is in the description, and catch you guys in the next video.